talk about fundamentals,
Yeah.
technicals, momentum. So let's try and understand what
Yeah.
fundamentals includes, and then do the same for the
Yeah.
technicals and the momentum component.
Okay, so fundamentals, are a lot about stuff that I talked about in some of the, the prior things. So looking at, premiums, for spot delivery of products versus sort of the exchange price. And then, prices of other products relative to, sort of the LME traded price, prices of scrap relative to the price. So those are all sort of fundamental factors. And then as well, things like inventory. So, inventories at various points in the supply chain, are they going up or down, at a point in time? Those are all sort of fundamental, sets of data there, and that I would be looking at. So again, last week when I said things are going to be flat, I was looking at those fundamental indicators, and there wasn't anything that says, oh, the price is going to pop next week.
Right. Okay. And what about? So let's get into technicals then. So in terms of what do you look at, or what do you look for?
Sure.
There?
Yeah. No, technicals, particularly in commodities and in a bunch of asset classes. Again, if you're going to be committing serious money into this space, a material portion of your investing, you need to understand the technicals. And again, these are things like the prices moving relative to moving averages. There's things like relative strength indexes in terms of how strong, how far prices can move up or down before they sort of burn out in terms of that price move. Because again, some of these lines, when you have like 50 days crossing 200 days, or a price moving through a 50-day and a 200-day, it's amazing how much money just simply follows the technicals. You could have a horrible day fundamentally, some bad news comes out, but if the price for whatever reason breaks those moving average, the magic lines that I call them, prices move, up or down. So, again, you'd hate to buy something, a day before on fundamental basis, just before one of these key technical points, and then your trade gets wiped out by by a technical move that you had no idea was coming. So,
right, momentum.
Yeah, that's the trickiest part, because that kind of, that is money coming at you from a different sector for a different reason. So again, you need to realize, commodities are a class. And as much as we talk about aluminum and copper and nickel and uranium and so forth, there are big hedge funds that are, pulling levers on billions of dollars that go, okay, we're going to reweight $400 million or 0.5% of our portfolio, because we like what's happening on some numbers that we're seeing. We're going to move $500 million into commodities, and they go buy a bunch of commodity index funds that happen to own a little bit of each of these metals. And then, a bunch of buying shows up in those metals, and, depending on what's going on those metals, they'll pop a certain amount or they'll go down a certain amount, based on that money arriving. So, those are always the trickiest kind of moves. And again, the key thing is if you understand the fundamentals and the technicals, then you can isolate those times when it's, purely a momentum move, and you need those other two things to show up to confirm, because the momentum will burn out on its own. If the fundamentals don't support a move higher or lower, then the price is going to come back down to where the the fundamentals are there to support it over the long term.
So it sounds like on the momentum, you've kind of got short-term momentum, or immediate momentum, and you've kind of got a longer-term thematic momentum, which can affect the market as well. Okay, so I just wanted to kind of just talk about those things, just so people can understand that.
Yeah, no. One way to think about it is the way I have explained it is that basically prices will tend to stay in technical ranges, unless a fundamental event occurs. So that's sometimes why do prices stay in a range for a while? I mean, it really is a lot of these. You can do it on a chart, and you can see, okay, it's trading in this channel or that channel. And unless, so you think of laws of physics, that's, a price will remain in a technical range unless a fundamental event occurs or a momentum event occurs to pop it back out again. So that's kind of the way I've always sort of thought about commodity prices.